Today we are covering Qualified Charitable Distributions, known as QCDs. A QCD is a powerful tool allowing taxpayers age 70 and a half or older to make a direct transfer of funds from their individual retirement arrangement, or IRA, to a qualified charity. The biggest advantage, and what the exam will focus on, is that this distribution is excluded from the taxpayer's adjusted gross income. This is a critical point. Not only does it provide a tax benefit for the charitable gift, but it also allows the taxpayer to satisfy their required minimum distribution, or RMD, for the year. The annual limit for a QCD is significant, currently set at $105,000, and this figure is indexed for inflation. Let's walk through a classic exam scenario. Imagine your client, David, is 76 years old. His traditional IRA has a required minimum distribution of $60,000 for the year. David is charitably inclined and wants to donate $50,000 to a public charity like the American Red Cross. If David simply withdraws the $60,000, his AGI will increase by that full amount. He could then donate the $50,000 and potentially claim an itemized deduction. However, with the high standard deduction amounts, many taxpayers like David no longer itemize. In that case, he gets no direct tax benefit for his large donation. This is where the QCD becomes the superior strategy. David can instruct his IRA custodian to directly transfer $50,000 to the American Red Cross. This $50,000 distribution is a QCD. It directly satisfies $50,000 of his $60,000 RMD. The crucial part for the exam is that this $50,000 is completely excluded from his income. He only needs to take an additional $10,000 distribution to satisfy the rest of his RMD, meaning only $10,000 is added to his AGI, not $60,000. On the tax return, the full distribution appears on line 4A of the Form 1040, but the taxable amount on line 4B is reduced with the letters QCD noted next to the line. The exam will test you on the fine print with trick questions. A common trap is the age requirement. A taxpayer must be 70 and a half to make a QCD. The exam might give you a taxpayer who is 71. This person is eligible for a QCD even though their RMD age is 73. Another trap is the direct transfer rule. The money must move from the IRA custodian directly to the charity. If the check is made payable to the taxpayer, who then endorses it over to the charity, it fails the test. The distribution becomes fully taxable. Similarly, not all charities are eligible. The exam loves to test this. QCDs cannot be made to donor-advised funds or private foundations. Watch for question details that specify these ineligible organizations. Finally, remember there is no double dipping. A taxpayer cannot exclude the QCD from income and also take an itemized deduction for the same amount. The exam will present this as an incorrect option. To help remember the core benefit, use this simple phrase: give from your IRA, keep AGI away. This links the action, a direct transfer from the IRA, to its primary tax advantage, the reduction of adjusted gross income. Mastering the specifics of the age, the direct transfer rule, and eligible charities is key to correctly answering questions on this topic.